They do. Those weekends just fly right by, especially as the holiday season gets closer here. But it's back to work tonight, guys and gals. It's Monday evening after all. It's December the 7th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with us because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a fantastic video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the Eminis, got the oil, and of course, we got the gold on our radar for tomorrow. Speaking of tomorrow, got some ranges, got some real nice, strong blow-off tops. A little bit of news tomorrow. We're going to break all this down and put a great plan together. I got a bunch of great setups we're tracking for Tuesday. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, we publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. If you've done so already, make sure you subscribe to our YouTube channel. Hit that little button below this video and make sure you subscribe. Speaking of subscribing, don't forget if you have any questions for me tonight, any questions, drop those questions in the comment section below. I'll get those answered as soon as possible. And as always, if you tune in every evening, if you're like me and you rely on this video to get your mind right and get those charts right, if you appreciate this lesson as much as I appreciate you guys tuning in every evening, hit that thumbs up button for me. Always appreciate you guys supporting our YouTube channel. So make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys enjoy the video content here on this video newsletter. Enough of the introduction, though. Time is ticking. Let's take a look at these charts. What's going on here in the markets here in front of us? Getting ready for Tuesday. What do we have in front of us? Well, first of all, on the gold, boy, gold was on a tear today. There's a whiff of stimulus in the markets right now. And as I mentioned last week, the minute we start to hear more good news about a breakthrough in stimulus, you gotta be a buyer of that yellow metal. So buyers obviously took this strongly going higher here. Now, I'll tell you right now, that strong move, anytime we see this much of a strong move, there are 4 different potential setups I always start tracking for the following day. So real strong move. I've got 4 potential patterns or 4 situations or setups I'm looking for tomorrow on the gold. I'm going to go over all 4 of those in great detail for you so you are ready for tomorrow. Over on the crude oil, you can see crude oil right in the middle here. The black gold, right? The Texas team. Now, crude oil, you'll notice, is range bound, right? Range bound. Big, juicy magnet right around 46. Now, range bound markets are balanced, so we're buying low, we're selling high, and we're focused on failures. But there's one really big concern I have right now on oil, and it has to do with momentum coming off of that high. Momentum is kind of the big variable when it comes to range-bound markets, right? Range-bound markets tell us to buy low, sell high, and avoid the middle. Momentum is the variable that takes most traders the longest to learn. We'll talk about why momentum is important. We'll also talk about how to trade that momentum along with, hey, who knows, maybe we'll see a breakout pattern here on the oil for tomorrow. And of course, last but not least here, how can we forget about the S&P, right? S&P, you'll also notice, right, is in a range, right? There's a big old range here on the chart. Now, I'll tell you, the S&P is overall bullish right now, as you guys probably know, but looking at your charts right now, into a trading range. So, again, range-bound markets want to buy low, want to sell high, very similar to oil, but there's one big concern I have on the S&P. There's a blow-off top, you may recall, right? We had that little blow-off top at the beginning of today's trading. It was actually Sunday evening. That blow-off top is a really big clue. And it really concerns me about buying this next dip. And I'll talk about why I still want to be a buyer on the S&P, but I've got to be a little more careful, though, because of that blow-off top. We'll talk more about all of this, right? The blow-off top, the pendulum swinging, and, of course, that strong spike here on the gold. Before we jump into this chart, though, I just want to make sure we check the news for tomorrow, just to kind of know what the calendar looks like here. Real quickly here, looking at the news schedule here for this week, courtesy of the Econo Day calendar. Now, of course, this is the second week of the month. The second week of the month is notorious for being a relatively quiet news week, not necessarily a quiet trading week, but a quiet news week. So you're not going to see a lot of scheduled news on the calendar this week, right? You'll notice all we really have here is that JOLTS report and the inventory report on Wednesday, CPI and jobs on Thursday, and of course the PPI number on Friday. So you'll notice there's not a lot of news on the schedule, for example, in tomorrow's trading session. And really, we don't start getting some of the big scheduled news until Thursday or Friday this week. So be aware of that, right? Most of the stuff, the JOLTS report, it's a good report, but this is probably not going to have that big of an impact on us. It'll probably be Thursday, Friday before we start getting some of these really nice scheduled news reports coming in to give us some market moving events. Now, that's what we know about this week. But let's face it, right? We've got COVID cases rising, right? So virus cases are on the rise right now. That's causing people to do strange things. We've got this COVID relief bill, right? The don't call it a stimulus bill, right? That was what got gold tearing higher. The stimulus bill, we're hoping we're going to hear more, Tuesday, Wednesday this week. I wouldn't hold your breath for tomorrow. Probably Wednesday for that stimulus bill. That is something that, as you saw on gold today, that is something that I think the markets are really waiting patiently for here this week, right? Virus cases rising is a big variable this week. Stimulus bill, again, maybe tomorrow, probably closer to Wednesday, Thursday, or Friday this week. That will be something kind of hanging over our heads here this week. Rollover, right? We got E-mini rollover. That snuck right up on us. E-mini rollover, it's scheduled for Wednesday. It'll be Wednesday or Thursday this week. Rollover is a big variable. Oh, and then Thursday, the FDA has a vaccine meeting. I believe was it Pfizer on Thursday? Big vaccine meeting on Thursday. And speaking of vaccines, right? They're just getting vaccines coming out. I think I saw the UK rolling it out today. Canada made an announcement today. The US, I'm sure, will also have their vaccine process. So that's on Thursday. So as you can see, there's no shortage of potential stimulus right in these markets this week, but it's probably not going to be right until Wednesday, Thursday, Friday. So that kind of leaves us wide open tomorrow, right? Wide open tomorrow. Now, normally, whenever you have a day where there's not a lot of news, and again, with the stimulus bill, probably Wednesday, Thursday, E-mini rollover, probably Wednesday, Thursday, FDA vaccine stuff, Thursday, Friday this week, right? So with not a lot on the schedule tomorrow, it's the top of the hour numbers that you really want to pay attention to. What I always tell my clients is that traders are people. So if there's no major news, if there's no major announcement scheduled tomorrow, watch those top of the hours, right? The traders are going to hang on to something. They're going to trade the open at 9 o'clock, 9:30. They'll trade the 10 o'clock shock, right? The gold fixing time at 10, right? The 11 o'clock transition. So there's plenty of milestones for us to use tomorrow, but as you can see, there's no scheduled news, and we got to kind of wait until later on in the week. Now, before we finish up here, though, don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be trading all this stuff together tomorrow morning. I would love to have you there, right there with us. We'll put the plan together tomorrow morning, right, and trade the plan together. I would love to have you there, right there with us. I'll put a link for you guys to get registered. Come out and join me tomorrow morning in our trade room. We'll get our charts ready here in a moment, but grab that link. Make sure you don't miss tomorrow morning's trade. I'll put a link down there for you in the description of this YouTube video. That way, if you want to come out and trade this stuff with us all week in the trade room, as an advanced member, you'll get the link there for you in the description. And then last but not least, your heads up, on Thursday night will be my last newsletter of the year. This Thursday, last newsletter of the year. As we go into the holiday season, it's time to refocus and get ready for 2020. So be aware of that. My last week of newsletters for this year will, of course, come back in January, and we'll get back on the horse once again. So it'll be a busy week this week, but again, most of this is going to be weighted towards the latter half of the week. And again, my Thursday night newsletter for Friday's trading session, last one of the year. So please mark your calendars on that as well. All right, let's get to the chase here, Joe. Got our prep work done for the news tomorrow. We know what we're dealing with here for the rest of the week. Let's get some charts ready. Let's find the best setups here for Tuesday's trading session. Now, first things first here, over on the S&P, let's grab a look here at the E-mini. What's the most important takeaway right now? What's the most important takeaway right now on the E-mini S&P? If I was to kind of sum everything up here right now on the E-mini, I would say we have a very strong bull market that finished off the session on Friday, right? If you recall, we had that big, right? Remember this big triangle that we talked about, right? From last night's or last week's newsletter, right? That buy off the low and up top on there, right? We talked about that last week on Thursday night. Well, the buyers finished the week last week very, very strong, and you'll notice what happened, right? They kind of blew off the top there as they came in this morning and rolled lower. Okay, this is a really important clue, because anytime we see this much strength in one direction, you know the odds are pretty good they're going to make a run back and take out those lows before we get that big move back up to retest the high. That's why I said in the introduction, that blow off top, if you will, is a really, really, really big clue, because when it rolls over like this and takes a nosedive lower, it pretty much leaves a bullseye right on that, 36.72 and a quarter down there. There's a big bullseye down there for the bears. And I was wondering today when I saw the market grinding higher and grinding higher, I kept telling everyone in the trade room this morning, it doesn't make a lot of sense, because with all that strength going lower, you would think they're going to hit that low again and then come back up again. Well, it turns out they were just waiting for it later on in the session. So the first big takeaway on the S&P is that blow off top, right, that then comes all the way back down. And again, all that momentum says we're going to probably get one more leg going lower. The second big takeaway here, it's a range, right? It's a range. We got lower highs, we've got higher lows, the moving average goes sideways. It's a trading range. So in all reality, what does a range market tell me to do? Range markets tell me to buy below the range at support levels, right? They tell me to sell above the range at resistance levels. And of course, they tell us to stay away from the middle of that trading range, right? Buy low, sell high, focus on failure patterns, breakout failures, and keep trying to go back up into that trading range. So knowing what the overall kind of key takeaways are right now, I've got my support levels marked up now below prior swings, right? My resistance levels above prior swings above. And the key is I want to buy low underneath the support swings. I want to sell high up above the resistance swings. The variable here, though, as you can imagine, is that strong move down, right? That strong move down. If we rotate down to that low now, this is not going to feel like a very bull market, is it? No, it's not. It may be overall a bull market. It's a bull market into a trading range for sure. But as we go lower here, my big concern here right now is, again, the middle of this range is a magnet. But my big concern is as this market goes lower, this is not going to feel like a very strong bull market. It'll feel like a bear market. So that's one of the big clues, or one of the big variables I have to adjust to as we try to buy this market here for tomorrow. So let's play that game. What if the market goes up? What if it goes down? And what if it goes sideways? Now, of course, I've got this. The key to a triangle, whenever you have these lower highs and higher lows, you want to really focus on the edges, right? Make sure you remember that part, right? Focus on the edges. Don't forget about that small detail, because you'll see an example of this on crude oil, because crude was a perfect example today of how those edges kept getting caught by buyers and sellers in the market. So remember that whenever you have a range, it's buy low, sell high, or buy at support below the range and sell at resistance above the range. And then if it's a triangle range, focus on the edges, right? Really focus on that edge, the major turning points, the major swings, right? Those kind of anchors of the triangle, however you want to describe it, right? Focus on the edges there. Okay, so that's the key here. So that gives us now that support level below. I got a trend line below it as well. I'd love to get long down here. So as the market tries to go lower here, what's my big concern? My big concern is momentum. The bears have a lot of momentum at their back, and for good reason. We had that blow off top. right off the high. So how do I buy? Because I'd love to be a buyer down here. Be a great spot to buy a nice deep pullback, especially since this whole move happened when a lot of us were sleeping, right? Or in the middle of the night in most places. So if we get a nice deep pullback going lower here now, and I can get a pullback to the moving average, how do I get long on this? What am I worried about? I'm worried the sellers are going to keep on fighting this. And so my favorite way to buy the low of a range whenever I'm worried about momentum is to use a very simple pattern called a nested failure pattern. In other words, as the market pulls back, I want to watch the bears try once. I want to see a higher high, try twice. And once I've got those bears, once I've got them commit, remember, it's a very bear market at that point. So I've got to give them one try, give them two tries. Now, there's a lot of different ways you can get in on these trades. The easiest way to get in on this thing is to anticipate where would the sellers have their stop losses, right? So one way to trigger the entry on this is to literally float an order, right, a buy order right above those highs and simply buy it as it snaps back up again into that trading range. The range acts as a magnet. Okay, another way to get long on this, little bit more advanced, is to look for a trap. Now, I will admit, these are by far the most reliable because these are going to get you into the lowest possible price. They're going to trap in the breakout sellers as they try to trade those breakouts, right, going lower. This is, again, a nested failure pattern with a trap low. This is a great setup if we can get it. One final variation of this is a little more common, and that is where we draw a trend line off of this low. These are also really, really reliable setups where you're simply waiting for the bears trying once, bears trying twice, right? Get a nice strong signal candle, right? Showing that bounce off that low. And of course, where's our target? Yep, back up into that trading range. So as the market runs lower, I like the idea of buying below the range because, again, look at a longer term chart. You can easily see we're very bullish in the long term. However, with this blow off top and this move lower, I'm not going to get too aggressive, right, on getting in off of that low. Now, there's also one more potential setup here, and that is if the market runs lower, holds a pullback, and breaks down. What is that called? That's a breakout pattern. Right, it's a breakout. We call these 1, 2, 3 breakouts. So if the market continues going lower here, takes out these lows down here, right? Takes out these lows and can hold a pullback. Now what I'll do is, we call these 1, 2, 3 breakout patterns. 1 is that strong move down. 2 is the pullback to the moving average. 3 is, of course, that jump off the moving average. Now remember, right, we see lots of really strong moves down that never hold. Strong moves down that never hold. So remember, we're not going to get fooled by this, right? We're not going to get in too early on that first pullback. But if they can give me that 1, 2, 3 breakdown, 1, 2, 3 breakdown, now we know for whatever reason the momentum has turned, the range is no longer acting as a magnet, and I can now mark up that low because now we're bearish. And I want to be a seller now. I want to chase it. I want to sell off the high. One of my favorite places to do this is the high of a new hidden channel as we go lower. There's lots of different ways we can trade breakouts, but one easy way to look for as the market goes lower here tomorrow would be that, again, 1, 2, 3 breakout into a hidden channel pullback. Now, where do we think the bears are trying to go on this? If they can hold this pullback here, where are the bears hunting for? They're definitely hunting for that 36.55 low, right? That's kind of the Thursday, last Thursday's low. You get the 42 down there. And of course, right from there, boy, we go all the way back into that range, right? This range back here, right, at 36.30 to 36.20. So some very, very nice potential moves lower here if these bears, right, can take control. So again, it's a nested failure, right, or a 1, 2, 3 breakout. Now, guys, don't forget, I cover both of those patterns and a lot of the variations of those patterns in my free trading course here at School of Trade. If you haven't done so already, I would definitely recommend, if you're serious about your trading career, career, grab that free trading course. You'll learn my 4 favorite entry patterns, my favorite trading strategy right now, which is called the 3-step strategy. And I'll also send you hundreds of examples of how we apply that strategy to our favorite futures markets. The most important thing, though, is it'll give you a chance to really get the most out of our time together every evening on this video newsletter. So again, grab that link that is published there in the upper right-hand corner. Get registered for our free trading course, and that way tomorrow night in our next edition of this newsletter, you'll know exactly what I mean when I say failure into pullback combination or, bull traps, things like that, right? You'll know exactly the patterns I'm using to trade them. So now we know how to trade it as it pulls back here right now. What if the market goes sideways here? What if we end up going sideways right in the middle of this range? Not a lot changes. I will say, though, if the market does end up getting caught, kind of stuck in the mud here inside of a range, it will definitely make me feel better about buying below the range. That's for sure. But at the same time, though, we still have to worry about that blow off top. So even if we go sideways here, I'm still going to be looking for, let's take out some of these lows, get those bears once, twice, right? And up from there with that nested failure, or again, right? Get that 1, 2, 3 breakdown. Same basic idea. So even if we go sideways right in the middle here, you still got to be careful as this market, right, tries to go lower. And then what about going higher here? Can I buy this thing as it's going higher? Before we go higher, where do we think the buyers are trying to get to? They're trying to get back up to retest that all-time high. And if the party really gets cooking tomorrow, that new measured move at 37.22 overhead, right? So big, easy target there. 37.05 is the new all-time high. 37.22 would be kind of the stimulus party, target at 37.20. You know what I mean? That would be when we hear about stimulus sometime this week, or, with the markets we're seeing right now, any whiff of stimulus, anything that sounds like it might be stimulus, right, may send us going higher there. So how do we get long on this? We know how to do this if it goes lower. That's kind of the easy part. As it goes higher, there are 2 patterns I would look for to get long on this. One would be a 2-try trap. So strong move up. Remember, strong move up here, shallow pullback to the moving average, and a trap low off of the low. That would probably be the best pattern here to get long before we get up to these highs. Now, what you want to remember is you've got to have a lot of strength, right? Got to really get a jump, right? Going higher here. Then you want to see a shallow pullback, a higher high in price, and a trap below that low. That would be a great buy setup as long as we can get it before we get back up to that 37.05. Unless, of course, right, just takes off right to the upside. If we really push through like that, right, obviously that will be a different story. I could definitely take that one as well. What I'm talking about, though, is I want to be careful getting into that right at these highs, right? That's the big concern I would have, right, as we go higher here. And then another breakout pattern would be a strong move up, a pullback to the moving average, and a jump off the moving average. Now, what do we call those? We call those 1, 2, 3 breakouts, or 1, 2, 3 reversal patterns. If I can get that 1, 2, 3 go, yeah, now I can go grab that high, I can grab that low, and I can definitely get long, right, on the first test of that 1, 2, 3 breakout into hidden channel pullback. That'd be a fantastic setup. Just remember, though, it has to hold that first pullback, right? We're not trying to trade that first pullback. Why? Because, again, it's a range, right? It's a range. The range acts as a magnet. Show me proof, though, with that 1, 2, 3, and I'd love to buy that first pullback off of that low. And then last but not least, could I sell this thing? Could we sell this market as it goes higher? Oh, we definitely can, especially if we can get up inside my sell zone up here. Now, what's our big problem going to be at this point? Our big problem is the market's overall bullish, right? So if I run higher here, what am I worried about? I'm worried about buyers, pitching a fit, right, and not wanting to give up on this thing. So how do I sell it? What's the easiest way to sell above the high? Because it's a range, right? Remember, the range is that magnet, right? The range wants to drag us back down. That weekend gap, right, is the magnet. We'll leave that gap on there all week, by the way, right? That's last Friday's closing price, that weekend gap. The bottom line, though, is we need one of those nested failures again, right? Because I don't want to just sell this thing, not because we're at the highs, but because we're too bullish, right? This overall bull momentum we talked about earlier. So again, that nested failure, right? respect the momentum here now. Let those buyers try once, lower low. Let them try twice, right? Maybe it's a trend line we short off of, right? Maybe it's the stop losses that we're shorting into. There are some variations of this pattern, again, and we'll make sure to kind of fill in some of these blanks tomorrow in our trade room. Just remember, though, strong move up like this, buyers try once, buyers try twice, right? You're selling the stops with the failure. You are selling the trend line with that failure. You've got your trap high, right? That, again, as always, is the best one because it lets you sell as high as you can go, but that will be how to get short off the high of this trading range. So I think it's a little more complicated because of momentum right now, but the focus is buy low, sell high, be careful trading breakouts, right? And don't forget, I cover all these patterns I've talked about tonight, all the failures, all the traps, all the breakout patterns. They're all covered in the upper right-hand corner, that little button that popped up there for our free trading class. And again, don't forget, I'll put all the important links you guys need in the description of this YouTube video. All right, so S&P, we got you covered here for tomorrow. Looking forward to a good day tomorrow morning in our trade room on the S&P 500. But how about the oil here? Let's get some oil going. Now, I reminded you earlier to pay attention to this oil, or pay attention to that range we saw on the S&P, and you'll see exactly what I'm talking about here on this oil. What's the key takeaway on oil right now? Well, first of all, we're bullish, right? Overall, there's a bullish market. And of course, you can see we went into a range, right? So basically last week, the market finished up with a bull momentum. Again, everyone's waiting on stimulus. Everyone's expecting a vaccine. There's a talk about extending the production cuts, right, from OPEC. So we have this big bull run, right, leading into last Friday's non-farm payroll report, and the market goes sideways into a range. So what do we do? What do we do in a bull market, right, with a triangle? We focus on the edges, right? We focus on the edges, and you can definitely see that's exactly what those buyers and sellers have been up to on this crude oil, right? This is very similar to what we talked about just a moment ago on the S&P. So one of the key takeaways is this bullishness into a trading range. Right? What does that tell me to do? It tells me to find support levels and buy at support levels with seller failure patterns, right, below the range. It tells me to find resistance levels above the range and use buyer failure patterns, right, even though there wasn't one there on that way back down. But that's the plan, right? Buy low, sell high. Focus on failure patterns at those support and resistance levels just outside the range. One other very important clue: we didn't have a blow off top on the oil like the S&P did, right? The S&P had that big blow off top and then came crumbling back down. But we've got something very similar to it, right? We have what I call in our trade room rotation from above the high. And whenever we have a trading range, and we go into, right, a bull market, into a trading range, what are we doing? We're trying to find support levels below the range, and we're trying to combine those seller failure patterns, right? Wait for the bears to get short and just buy into the stops, right? Use the range as a magnet. Find a level of support below the range and use a failure pattern to literally run the stops going back up into that trading range. Okay. Now, what happens sometimes, though, is the market will make that big run up and they'll come tumbling back down, right? Now, as they come tumbling back down now, what's the problem? The problem is not so much the range now, because we know the range will keep acting as a magnet. The problem is this momentum coming off the high, right? There's a big difference between buying underneath the range and then buying under the range when the market is, well, you can see, rotating from above the high. What is the concern on this? The concern is momentum. And so I feel like the S&P was a great segue, right, or transition into this oil, because you can already kind of see what my pattern would be for tomorrow, right? How I would be buying this, right, for tomorrow. I got my support levels, I got my range, but I'm concerned here about the strength of this move going lower. So really at this point, as the market takes out this pendulum swing, because after all, right, ranges are balanced. So the market goes above the range, goes above the range, or goes, the amount of the move above the range is oftentimes the amount of the move below the trading range. So I know where I have support levels down here. We're underneath the lows. I'd like to be a buyer down here. I just don't dare buy right into that strength. Because remember, anytime you see a strong move in one direction, the odds are pretty good we're going to see another leg in the same direction. And I don't want to fight against the current of that move, right? So rather than doing that, let's wait for a nested failure pattern. As we go lower here, how do we buy it as the market goes lower? Let the bears try twice. Let them try once. Let them try twice. Again, I can buy into stop losses, right? Looking to buy into stops. Okay, that by far the most aggressive way to do it, right? Love to use a trend line to get long off of. That is one of my favorites. One try, two try, buying that trend line. And again, not the most common, but by far the most reliable, most powerful is that trap low, right? That trap right below that low, because after all, what is it doing? Right, it's giving you a chance here to buy as low as possible. You can see an example back here, right? We go lower, the bears try once. Remember, you got to get a higher high, right? Got to get a higher high. They don't get a higher high until right there, and look where they come back to. Right below that low. Kind of a weird one because that kind of weird interim low there. But that is exactly the same pattern that we'd look for, again, over here, right? So copy and paste that one right over there. So again, market goes lower. Momentum is a concern. The range is the magnet. Let me talk before, and I want to use that nested failure pattern. Now, as you can probably assume, with all of this momentum going lower here, if these bears, if they can hold this pullback and give me a strong leg lower, there's a good chance this market breaks free of this magnet and starts to head down to some of these levels we have down below. So if I can get this to be a 1, 2, 3. I will say this. I would like to see them take out this pendulum swing first. That would make my job a whole lot easier because once they get that pendulum swing, that's usually a pretty big milestone. Then if the sellers, if they can hold that breakdown now, that's a pretty impressive hold. All right. Again, I'm not going to force it there because, well, look what happened back there. Right? You can't just say, oh, it's a very strong. No, it's a range. It's not a trending market. It's a range-bound market right now, and momentum is the big variable as we go. So mark up that low, mark up that high, and then we can sell off the high, right, with that, again, 1, 2, 3 breakout into a hidden channel pullback. Now, where could I look for that target? The target, of course, is now down. I got 44.60. That's an easy one. The real big spot, though, you got to think right now is going to be that 44. 44, that number should ring a bell because we've been hanging around 44 here for quite some time. And then, of course, you got the granddaddy support level down there at 43.33, right, and change. So we got some easy levels for magnets as we go lower, right? If we can get the breakout, we can trade it lower. If we don't, we're going to try to buy it, right, going back up into that trading range. Now, remember, if we do end up going sideways here inside this range, what do? We sit on hands. And I will say, if the market runs, if we run back up, let me get closer in on this here for us. If we run back up and we start going sideways inside that range, I'm not going to be so concerned about momentum any longer. What I will look for, though, is I'll look to take out those lows. Then I'll look for a seller failure pattern, right, to buy off of those lows. So if we do go sideways, I can be a little more aggressive, but we've got to show proof, though, with that, right, with that range, and then think about a seller failure pattern just below that range. Now, again, if you've taken my trading courses here at School of Trade, you know exactly what I'm talking about when I say seller failure pattern below the range. If you haven't done it yet, though, make sure you grab that free course link. That way, when I say breakout, reversal, or 2-try breakout, or 1, 2, 3 breakout, or seller failure pattern, you'll know what I'm talking about, and you'll be able to get a lot more out of these videos. So again, we know how to trade it now if it goes sideways. What if we go higher here? If we go higher, this is a very similar situation we saw on the S&P. For example, we know those buyers want to get back up to 54, up to 68. So if I can see a real strong run higher, if I can get a shallow pullback and a higher high before we get there, I'm definitely open-minded, right, to grabbing that trap, even though the range will act as a magnet, just because rotation is so easy to anticipate in a range-bound market. So if we do see a real strong run higher, clear right through that trading range, shallow pullback, higher high. Yeah, that trap, I'm not worried about that one at all. What I'm more worried about though is a strong run up, a pullback to the moving average, and a jump off that moving average. I would really want to make sure we see some good strength coming off of that pullback, because unless we can get a lot of strength pushing through, we're just not going to be able to get the confidence we need, right, to buy that pullback off the low of that channel. So that's going to be something we'll have to make kind of a game time decision, as they say, right, for tomorrow. We'll have to see how that momentum looks as it's popping right off of that moving average, because there's no guarantee that we go through that big high up there at 46.68. Right now, where's the next target overhead? There is a ton of open space here. I mean, you've got to go all the way to 50 and change before you start to see any real levels of resistance overhead here. So you have to assume there's going to be a lot of sellers trying to defend positions up here. There's a wide open space way above us. So speaking of selling it, though, if the market did go higher, how would I sell this market? If the market runs higher here, what's the problem again? Momentum, right? Yeah, that is the problem once again. And again, I know we're talking momentum a lot right now, but remember, it's a bull market, right? It's a bull market overall. So if this thing fails to take out these lows, if they fail to retest that pendulum swing, right? In other words, if they fail to complete this mission going lower and this market takes off to the upside, it's probably because of stimulus talk, about OPEC talk. It's probably because of something like that. And so as the market runs higher here, I've really got to be patient. Let those buyers dig their own grave, right? Let them chase after it. Let the aggressive traders try it once. Let the conservative patient traders try once. Once I've got those buyers, right? Once I've got them knee deep in their own grave out there, right? Now I can get short, because now where stops? Their stops are hanging out just below those lows. I can sell the trend line. I can sell a trap, right? We've talked about this quite a bit already here, so I won't repeat that over and over again, but a nested buyer failure. And again, we're seeing a lot of these nested patterns because of these wild swings, right? These big volatile swings right now on the chart. So I have no problem selling off the high, but I do want to make sure though that I respect that momentum. Now, of course, oil is ready to go here for tomorrow. We got that looking good. Should we grab some gold? Let's grab some gold here, wrapping things up here for tomorrow. So range on the E-mini, range on crude oil. Lots of nested failure patterns on those two markets because of momentum. And speaking of momentum, shall we grab a look at the gold right now? Right? Yeah, let's do this. Let's finish up on gold here tonight. Always appreciate you guys tuning in every evening and sticking around. By the way, hopefully I've earned a subscribe to our channel by now. Hopefully you guys are enjoying the video. Don't forget, if you have any questions, drop those questions in the comment section below for me. What's the key takeaway right now in the gold? The most important takeaway, as I mentioned in the introduction, is this strong spike higher, right? This strong spike higher. Now, normally, whenever we see a strong run, I mean, look at this. It never even pulled back to the darn moving average on this 2000 tick chart. So a very, very strong run. And you can see a great example there of a nested failure, right? Bears try once, bears try twice, and then up we go from there, right? That's exactly the type of pattern I'm looking for to buy these lows here tomorrow on the E-mini and the S&P. The bottom line, though, is strong move higher. Usually when you see a market just melt up like this, the price becomes too high to buy, right? Nobody wants to buy way up here. Most of the time, a market will start going sideways after we get a move like we see today. I thought it was kind of interesting how the amount of the move down is almost identical to the amount of the move up. We call those double ups, right? Because when you get a reversal like this and you don't get a 1, 2, 3, there's no measured move to draw. right? There's no you can squint your eyes all you want, but you're not going to find a good measured move in there. Usually in these kind of V bottom reversals off the beginning of the session, the amount of the move below or the amount move down is oftentimes equal to the amount of the move up, right? Is a good example of when you don't have anything else to work with, you take what you do have to work with and you make it work. And that's a good example there, 1868. So it looks like they've got that. It looks like that's where they wanted to go. My question right now is do we go sideways, which is the most common scenario the day after a move like this? Do we see a real deep pullback, right, into that battle zone? Do we see a reversal? Right? A reversal would be great. In fact, that might be one of the easiest ways to trade this thing tomorrow. Or do we grind higher, right? Do we grind higher? Does this market turn into kind of a grinder, as we call it in our trade room? Let's talk about this, right? Because there are 4 potential scenarios I want to make sure we are ready for tomorrow. Now, I will say probably the easiest pattern would be if the market goes sideways. Now, I'm kind of guessing right now. I'm making an educated guess, of course, as far as where that range is. I don't exactly know where that range is. It might be a little bit higher, might be a bit lower, so just be aware of that, please. But if it's a range, it's a bull bias. What do we do in a bull market? Or what do we do in a range with a bull bias? We find support levels below the range, right? And there might be more tomorrow, by the way. There might be a triangle that forms here, right, for tomorrow, right? Find support below the range, and then what do? Wait for that pullback. Yep, wait for that bear breakdown, wait for those sellers to get short, and we'll buy right into their stop losses with, again, what do we call these patterns? We call these failure patterns. All they are is just a breakout failure, right? We wait for the breakout. We wait for those breakout pullback sellers to commit. We know exactly where their stops are, right? It doesn't take a lot of experience to think about where those rookie breakout traders would be placing their stops, and we simply target buying right into those stop losses. So if it goes sideways, look for the market now, right, to break below and buy right back up. Now, how about a deep pullback? If we get a deep pullback, the hardest part about this deep pullback is going to be this trend line, right, coming down. That's going to be a tricky part. There are 2 ways you want to trade a deep pullback. One would be with a trap below the trend line. This is probably the hardest one to get into. The other would be a breakout pullback on the other side. Okay, so kind of think about how this would work here, right? Bears try twice. It's a trap low, or it's a breakout pullback on the other side. Those are the 2 entry patterns I'm looking for if we get that deep pullback. I really like this area right here. That 1852.7 is a prior swing high, not from today's price action, but from last Friday's. Yeah, that's last Friday's high, right? Yeah, so that area right there, 52.7 is great. The problem is, though, if we go lower, what's going to happen? Yeah, not so much momentum, but that trend line. Now, what I want to do there is, again, get a trap low. Okay, that will be critical because that's going to help us avoid buying into that trend line, right? So trap low, remember trap patterns are part of that free trading course, as mentioned earlier, or, right, and again, that's probably the hardest one, or as we try to get lower here again, I can get back above it and use that trend line now as a level of support. Now remember, this type of entry here, you want to make sure you're not getting in too high up, right? So that's one of the hardest parts about it, is making sure you're buying nice and low. There will be some variations to this. There will be some nuance to this tomorrow. We'll kind of plug all the holes on this tomorrow as we see it developing. But that's the idea on this deep pullback, right? Look for that, again, almost a 2-legged pullback up and over, and use that trend line. Now, as you can imagine, what would a reversal look like? A reversal here would be a strong move down, hold the pullback to the moving average, and you got it, jump off the moving average. This could easily reverse, but the problem is we don't want to get too aggressive on that first pullback, because why? Yeah, remember, it's a very strong move higher. Anytime we see a strong move in one direction, there might as well be a bullseye right back up to retest that high, right? That's why I want to be a buyer on this deep pullback. But If those sellers come out of nowhere, let's say tomorrow the headline reads the stimulus bill is off, right? Is off, right? We're not negotiating anymore, right? There's no possibility for any more. Don't call it stimulus, right? The relief bill coming in, right? If that happens, this could easily go right back down into that trading range. Is it likely? Doesn't seem likely, but it's definitely possible. If we do get that strong jump off it, we call this 1, 2, 3 reversal. You know the drill, right? Mark that low, mark that high, right? Find that high and get short right off that high. 1, 2, 3 reversal into hidden channel pullback. Now, I'll be honest, sometimes easy come, easy go. A market that moves like this one day could easily move like that the next day. So if the market was to just completely fall apart, my favorite entry pattern whenever a market starts to run is that 2-try trap pattern. We talked briefly about this earlier on the buy side as we rotate higher on the S&P and the crude oil. This would also be one though, right? Buyers going to buy it once, buyers try it twice. The key to this entry pattern is that the strength of that move gets everybody jazzed up, right? Everyone wants to sell short now. The shallow pullback doesn't allow the professionals to get in. And that obviously frustrates people. And once it traps, nobody misses that one, right? I should almost call this the FOMO trap, right? That's exactly what it is, right? It's a trap high that capitalizes on the fear of missing out. And then as you can imagine, the target on this will be down around that 1824. Yep, 1824.8, that low, being easy magnet here for those bears. So keep your eyes on that reversal. And then what if we grind higher? Where will we be going? Where's the next objective? The next objective where we're headed is 1900, pretty much, right? 1900, pretty much the next big milestone. There are some levels overhead from that, but 1900 is a pretty easy target here for those buyers. Now, there's a couple things that you want to think about, right? First of all, if the market just grinds, right? If it kind of grinds up, what do we call these? These are called spiking channels. So be aware if the market grinds up with a channel or grinds up with a wedge, you know what I mean? What you want to do is you want to focus your energy on getting underneath a prior swing, right? Doesn't matter which one, just you want to see a deep enough pullback. Again, it's grinding higher. Nobody's taking profit. Right? The market keeps on grinding higher. Wait for that pullback, right? Get underneath one of these prior swings. And these are some of my favorite setups. Looking for a seller failure pattern into a bullish pullback, right? A combination pattern. Okay, now remember, this again is if the market keeps on grinding higher here, I do not want to chase this thing higher. I know it's difficult, right? The key is get underneath one of these prior swings, get me some pullback. I would love to get this off the low of that big channel. It's not required, but I do want to get us, again, give me a relatively deep pullback. Doesn't be that big. Then look for those sellers to fail into that bullish pullback, right? Running higher here. And a lot of times, I'll tell you, this will be a failure into pullback into strength into trap. We may see a really nice setup sequence off of that, right? Failure pattern, pullback pattern, strength move into a trap, right? These are 4 potential setups if the market keeps on grinding higher. And again, I cover all 4 of those in that trading course I keep talking about in the upper right-hand corner. So if you want to learn more about those, find them there. All right. Looking pretty good here for the gold, right? We know the up, the down, and the sideways. We are all ready to go here for Tuesday's trading session. So we got the plan ready. All I need now is you, right? Come out and join me tomorrow morning, every morning, 8 o'clock Eastern time. It's so easy to get registered. I'll put all the information you guys need. I'll put a big button for you below this video tonight on the trading blog. I'll put all the links you guys need in the description of this YouTube video. So don't delay. Grab that link, get registered. Don't miss tomorrow's trading session. We'll be here all week kicking butt in the trade room with all the advanced members. Don't be afraid to call the office if you have any questions along the way. We got live support on the left, live support on the right. And again, drop those questions in the comment section if you guys want to do it there as well. But whatever you do, though, don't be a stranger. Keep in touch. If you got questions, right, holler at me. I'm happy to help out. And as always, we'll see you guys tomorrow morning in our trade room at 8 o'clock Eastern time. But that's it for me, guys. Tonight, great job tonight. Get some rest. Don't miss tomorrow morning's trading session. We'll see you guys same time, same place in tomorrow night's newsletter. If we don't see you guys tomorrow morning in the trade room. Hope you guys had a fantastic weekend. Happy holidays to everybody. Boy, it's about that time of year again, isn't it? Always love this time of the year. Hope you guys are out there having a great time during the holiday season as well. But that's for me, guys. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.